Buy like a billionaire. You have until November 15, 2013 to buy your first $1,000 worth of gold or silver at spot prices. Click the link below in the More Info section for more details. Again, till November 15th.
Welcome back to the second hour of this October 28th edition of Butler on Business. And joining us now is David Morgan of the Morgan Report. David, how you doing?
Doing quite well, thank you, Alan.
It's always a pleasure to have you on. Silverinvestor.com is another website of yours, is it not, David?
It is indeed, yes.
David, so what are you thinking of the silver market right now? Spot when I came on the show today was $22.56 the ounce. We've got the Federal Reserve printing all kinds of money. We got a government that has no limits on the amount of money that it can spend in deficit. It would seem to me this should be a very bullish time for silver.
Well, fundamentally, it would certainly appear that way, but as you said, the price is kind of locked in this trading range. We're sort of, currently we're about 23 to maybe 20. We've come up off the recent low, and we seem to be going pretty much sideways, gold as well. And we just finished the 11th Silver Summit, as you know, Alan, and attendance was down from the previous year. But these are the real believers, you might call them. And actually, I talked to the organizers, and they said they actually made money on this event. And last year they did not. They broke even. And it looked to me as if there were probably more vendors there than there were the year before, meaning mostly mining companies. There's some bullion dealers and other people, but primarily it's mining companies and bullion dealers. So it's just a lackluster market when it should be anything but, and there's really no explanation other than, I think, the psychological mix. I mean, the further this thing drags on and the less movement there is, the more sideways movement, in other words, the less participation and the less aggression to move into the market, or I should probably not use the word aggression, but the less desire to get into the market one way or the other.
Do you think this may have some being influenced rather by the plunge protection team, or there's just a general lack of interest in the precious metals at the moment?
Well, I would go back and say, once the powers that be clubbed silver and gold down, again, we've talked about it before, but the 26th level on silver and the 1550 level on gold, once that was accomplished and they really beat them up, we pretty much gone this sideways trading pattern. And again, I think the low is in for this last couple of years, to be determined, of course. But the psychological bent was just broken at that point. And yeah, they probably intervened since then, I'm sure, but not to the level that they did on that one time only. And that, of course, is what it took, I would say, to maybe shake out the last of the weak sisters. I mean, people that were holding had bought at that level or were buying at that level, and then to see, silver go from 26 all the way down to really 18, 17 at one point, and then do that key reversal, there's little solace in that, because if they're buying under 30, which is what I've been saying, months ago, that any time you could buy under 30 long term, well, I could have said under 20, but you didn't have much of an opportunity to buy it under 20 a few days. 25 probably would have been a better statement looking in hindsight. Regardless, it's the psychology. Most people that are believers, that know the fundamentals, that listen to shows like Butler on, like your show, Alan, they are in. So what we need is new buying, and that isn't happening. And the way to see that happen is some event, some education, something that take place. And something could take place, and all of a sudden there's a huge rush in the metals. But those type of black swans are hard to predict.
David, why would the plunge protection team really care about the price of gold and silver? What do you think their motivation is in suppressing that?
Well, we get asked this a lot, and we're getting out into the why questions, which means intent, and of course those are tough to answer. But if you study gold for over any long historical period, you'll see that gold has been manipulated most of the time. Very little has it actually been in a truly free market. And the reason for that is that, especially now, is because the paper paradigm There's so much at stake. The whole financial system is based upon this lie that you can create something from nothing. The banks know what they're doing. They can stimulate the economy. They can QE. They can get us out of this debt problem and on and on. All that's a big lie. So gold is a barometer, like you would think of a barometer for a weather system. If the barometer is moving in one direction, you can bet your bottom dollar that something is coming, and coming, depending on what the barometer is showing, something could be coming that's very severe. That's gold's function, really, among others, but that's one of its primary functions. So if gold took off and kept going and going and going like the Energizer Bunny, then even the most lackluster anti-gold person would have to admit something is going on. It's like, some big event that people just couldn't miss. But when it moves in these, quote, trading ranges, or it gets ahead of itself and gets smashed down, then the psychology is under control. So gold is just, it's only gone up 10 years in a row, but the last couple of years it hasn't done that much. So, I don't think there's really a need for gold. Look at the stock market, look over here, look at this shiny penny over there. It's a distraction. So that's, I think, the main function, is to distract people from the power of gold, especially if you can get, these whack downs, as I call them, that take place, and get people that may have been interested in, out of the market, or quit thinking about it, or get them thinking of something else.
Do you think we'll ever see the confiscation of gold again here in this country?
I doubt it, but that's an opinion. There's others that, write on my website and interviews we've done and on that think differently than I. But, no, I don't think it will ever happen. I mean, number one, the first thing it would say is that the government thinks gold is valuable and it has meaning. And the Bernanke said just the opposite. It's just a tradition, it's not money, when Ron Paul asked him. So I just don't see it. It's very cumbersome. It could happen. I mean, I don't rule it out. I'm not saying I know for certain. I don't. But I really, really doubt it.
Why do you think FDR, confiscated gold but not silver back there in the 30s?
Well, that's a debatable question. First of all, gold was the one that, you have the executive order on. But silver, they did it too. I mean, if you read the website, we don't have time to go into it, but you look at all the historic work that Charles Savoy has done, they put some pretty heavy restrictions on silver. And although they didn't use an executive order, the way they did it was basically to become the buyer of last resort. And that's how the United States ended up with over 3 billion ounces of fine silver. And they did it by buying it under the true market price, meaning what the at-law price was, which was $1.29 per ounce. $1 is a weight, by the way. $1 of silver is about 3/4 of an ounce. And so you'd have to go into history again. We don't have time to go into it. But you don't want to tell Charles Savoy that silver wasn't confiscated. They just did it probably in a better thought-out manner than they did the gold. And really, it was absolutely the reason that the United States ended up with a huge, huge supply of silver at one time.
David, since you're a student of it, you know as well as I do that this country started off on the silver standard. I mean, $1 was 371 grains of pure silver. What we hear is many people advocating a return to the gold standard, but we were on a silver standard for a much greater period of time. Why don't these same people just say, well, hey, let's go back to a silver standard?
Well, I think it's because of the education. I mean, a lot of people have a cursory view of the gold market or a gold standard and what it means. But really, if you study history, and of course my gold bug friends don't like it, but a gold standard, Mike Maloney gets it, by the way. In fact, he just did a video, I think, in the last couple of days stating this, and I've stated it also, that a pure gold standard is really only one step away from a fiat system. And there's a gentleman that did research on this that you could probably Google on the Internet. And I believe his last name is Taglia, Talaga, something along those lines. What you really want is a buyer trimetallic system. You want, gold, silver, or gold, silver, copper, and you want a floating exchange rate between the three metals. You don't want a fixed exchange rate. And if you have that, then you have a pretty much people's money. But if you have a gold-only standard, just think about it. If you went to gold only right now and had a gold standard or a gold cover clause of some type, who has most of the gold? Well, right now it's about 50-50, if we believe the data. About half of the gold is out there in the public's hands worldwide, globally, and the other half is still held by the banking establishment. So if the banks have the gold and they make the rules, the golden rules, he who owns the gold makes rules. So if they've got the gold and they make the rules, guess what? We may be set up for something that may appeal to the people politically, but in the not-so-long run, to basically under the same authoritarian system that might look different and smell different, but underneath the covers, it's basically the same people. And that's what we want to get away from.
We've been speaking with our dear friend David Morgan, silverinvestor.com and the Morgan Report. Hey, David, it's a pleasure, my friend.
Thanks so much, Alan.